Thank you very much, Mr. Speaker. I'd like to engage my colleague, Mr. Himes, in a colloquy for the balance of our time. I appreciated the comments that you made just a few minutes ago, but you alluded to the length of time that we have organized the SEC and some protections and what happened, the kind of growth that we had, but now things have changed somewhat and the oversight, the responsibility is a little bit more complicated and a little bit more difficult. What did you mean by that?
Yeah, I thank the gentlelady from California for that question. If you look at when these regulatory bodies were established in the 1930s and you look at the volatility and the growth that happened in the next 60 years, volatility was way down and growth was way up. An American middle class took hold because they had confidence in the system. They knew that their investor dollars would be protected. Then we began in the early 90s, policymakers from both sides of the aisle to dismantle that regulation, to take the referee off the field. And so we find ourselves where we are today. Uncertainty, a financial crisis meltdown at the very moment when the technology, the flash trading, the complicated securities are bewildering in their complexity. Now is exactly the wrong time to be gutting the SEC. We do that and people lose their confidence.
Well, I want to ask you, is it true that the average investor, I'm not just talking about the big institutional investors, but the average investor understands the complication of this? Do they expect that we understand it and we're going to regulate it, we're going to watch out for them? What does the average investor know about this system?
Well, the average investor, the mom and pop, the widows and orphans funds, they're not necessarily financially sophisticated. They need somebody looking over the shoulder of those who are selling them stock, selling them bonds. The institutional investors that you're talking about, of course, in many instances are exempt from regulations by the SEC. They're deemed to be sophisticated, so they can participate in private placements. They can use 144A or Reg D to make investments. But our individual investors who are so important to this economy need somebody looking over their shoulder and protecting them from snake oil salesmen and deception and poor disclosure.
Well, we heard on several occasions here today the tremendous oversight responsibility given all of the capital markets that have to be monitored, that have to be regulated. What do we need to do to make the SEC stronger? We've gone through this meltdown. We've gone through this crisis. The American people expect something to happen. What do they need in order to be good overseers, good cops?
In a more complicated and sophisticated financial world, the SEC must be faster, it must be more efficient, it must hire people who really understand the markets, it must be more robust, and it should be held accountable. One thing it should not be and cannot be is underfunded and weak, which is what the proposal of the majority would do to it.
Thank you very much.